Welcome to another podcast from Traders Community, brought to you by traderscommunity.com. Purveyors of fine wines, fine ales, and all those good things. Well, today was we got resolution and a continuation as we expected. Hopefully people are on that as we've been talking through and showing off the technicals, at least following our strategy, what if it all makes sense. So on that note, remember, this is not financial advice. We are just sharing our strategies, what's going on in the bigger world, macro and micro influences, and all alike. So welcome, investors and traders and punters and dribblers. We have the glorious Madavi here. You can see Meta Johnny live on the screen right now. So without further ado, let's get into it. So right now we have oil still trading around 121 despite everything that's gone on, and natural gas still at 867. Oil was actually up today, natty down a bit. SPX is bounced a little bit off the low to 37.55. The Russell is down at 17.18. Nasdaq 329, and we can see the VIX finally shot up. Remember, there's been no fear until Friday. Some crept in a little bit more today. 33.63. We're going to see if that continues or it's another delusional movement. So lots of comments out there. We got a lot of feedback on things like Twitter. It was good to see a lot of people starting to get what we're doing and are using the Sierra charts and stuff like that. But also we get a lot of feedback, like, how does this happen? So we've been saying it, and it's, I guess if people don't want to listen to the podcast or don't get it, that's it. That's why we constantly warn about dribblers. Be very cautious of them. You saw a multitude, as we said last week, come Wednesday, Thursday. The stock market's constructive. This is good. They're all buying and gloating. There was a lot of people out there just making fun of pro traders. Well, pros don't do that. I mean, you do, but you've seen what happens to that. If you're a boxer or something, that's all well and good. But last time I looked, the people carrying on like that have never stepped inside a ring or a cage. So on that note, just ignore them the best you can. And the DDD that we have and put back on that bounce, as you saw on following us, that obviously did very well today. As far as the S&P goes, we're going to go through that first and then go through the Nasdaq. So this is all clinical stuff. And what's amazing is that we were actually nearly stopped out the other day on S&P. I believe it went within 7 handles. So remember what it was. This isn't magic. We actually sold off the tanking here on the weekly, and you can see it retested. That's where we nearly got stopped out, right? And then lo and behold, we never got back over the cloud. So I've seen people out there saying they're purveyors of Ichimoku. You've got to understand the whole thing. This all works together. If someone just says the cloud or just says the tanking, it's irrelevant and is more telling to me of someone who is trying to justify a position or something like that, right? And you want to know it before the hand. You have a plan ahead. You don't want to be selling here. You want to be selling up here if you can, right? And remember, it all goes with Murray. So look at this. It's all plus 1/8, plus 2/8, all this territory. We go to daily. We bring it down a notch. So remember, daily had the break. There was that long on the tanking, and then it got through the cage and then failed, which is exactly the weekly. Now, it's in no man's land, so you had that risk up here, but it never really got near it. But what it did do, it built this pennant, and that's what broke out of the pennant and the tanking. If you recall, we went through all this. So this is nothing new. We went through those lows. We've come down to 4/8. Which, lo and behold, what's interesting, it didn't quite get to these lows of March or February, right? And on the owl of the 240, you can see what's happening. I guess I should make this wider for y'all. So here's a closer look at that pennant. And remember we did those lines on Thursday. Was it Friday? And we broke through those hard. And as we said last week, on Friday, that we expected it to open down here. And yes, it did. And remember Madavi, the same thing on NDX. So he's going to talk in a second here. So same pattern. So this shouldn't have been a surprise. And we said that in it. We had CPI. We all knew that was coming. We know that Powell's talking last week. We know that oil and gas are through the roof. We know we're getting more and more indecision politically. We know that we had the worst sentiment ever, consumer sentiment on Friday. But even before Friday's sell, we'd already positioned ourselves short and gave the reasons. And basically most pros did. Hobbyists didn't because they're only thinking one thing. You can't ignore reality in this game. The bond market was telling you. The dollar yen was telling it. The euro was telling it. We had ECB on Thursday last week as well. There was a multitude of things if you want to look at them and understand them. So this shouldn't become a surprise. The other thing, before we go further, I made a point of telling people to... we didn't tell. We suggested that take profit on some of these super gains on the energy stocks because the stocks get ahead of the prices, right? So Exxon, you saw, which is the best of them, come off $5 or $6. SWN, EOG, all these ones came off markedly. In fact, energy was the biggest hit today. I'm not talking about oil and gas. I'm talking about the stocks, okay? So the reason we say that is just it's a numbers game. It's common sense. Keeping your mind clean and ignoring the dribblers. You got to not let that shit get in your brain. It's going to ruin you mentally and financially. Okay, let's have a look at the mighty. Let me bring up the Nasdaq. So they're all technical terms I use, Madami. So here's Nasdaq, and this is the other thing. Before I just wanted to say on the S&P. This is one thing why we didn't go too heavy. We added on Friday, if you remember, on before then, because this was either going to be two things. The Nasdaq was going to be weaker than the S&P, and it was never going to get tanking, which it turned out it never did, but we didn't know that at the time. Or the S&P was a stronger one. This was going to go to the tanking before it came off, which meant you got to spit on S&P. Lo and behold, what happened was just perfect resolution on the S&P. Okay, let me bring up a daily for you. So here's daily. So this is where you first got all real short again in this pennant, I believe. Do you want to walk us through it? And then I'll bring up the shorter term one.
Well, me?
Yep.
Well, I mean, today was, the market just sold off the whole day. There was a one or two bounces. I'm trying to bottom pick this market, and then I just gave up after 3-4 tries of losing. I had a couple of good games, but Nasdaq moved so fast. It was hard for me to take those gains even. So I was going for a little bit more, and as soon as I went to go hit the button, I was like, I just couldn't do it. Just because I thought I was going to get better pricing. If I wanted to really get out, I could hit in, got out for sure. But the thing I'm trying to say is your mind had been decisive on that action, or otherwise you could have missed it.
Yeah, I mean, the liquidity is down right across the board. You've probably seen comments over it by a lot of the banks, Goldman, Morgan Stanley, if you read their materials. Liquidity's really down, right? And I've mentioned that on oil and gas. Part of the reason of the volatility is that there's less players because if people have either blown up or margins or whatever. And we're seeing it the same in our indices. That's why, if you remember, some of the short stocks we did over the last 2 weeks, we actually got stopped out of. You still got to have discipline. We never got stopped out of the futures, but I mean, Madavi likes to joke about that Bumble one, right? But it went. So what do? You don't know if the dribblers are going to do it. So what the main reason that happens is because of lack of what do you call it, mate? Liquidity.
Well,
right.
people trading. So then, then I started going, forget about the longs. I started saying more on the short side. I traded the smooths with it. Also, I had my swing position. I doubled that up this morning. I got out of half the one that doubled. I got it out. I think we were down 450. So I'm back to my original swing. And I just been trading this. You know what was easier to trade sometimes was the smooth, the S&P. So I mix around with both of these things and trying to put together. But I got beat up on some of those long positions coming into the day, thinking that we were going to bounce it open. I know it was not one of those days.
Well,
so I reversed it and went along with the market, but it was down quite a bit.
Yeah, so I think I know the one you're talking about. That so S&P wasn't too bad, but let me bring a 5-minute chart up. So I think it was this one. It almost. Yeah. So we had that nice bottom, and then it got to. I don't know. I think there was a reason for it. Oh yeah. Sorry. Okay. So one of the most important thing is. Sorry, my brain. It's been a long day. We've always said bonds and currencies lead it all, right? And that's why we were probably 3 days to 4 days ahead of the game. So what happened overnight? The 10s and the 2s inversed, right? So that basically means, in theory, that means a recession. But it did it pre-market. Didn't really mean anything. It got to minus 5 or 6 basis points. And all this stuff's in the notes if you want to go to the website. Then that turned to be minus 12, right? So in other words, so what that did was that fueled this bounce, right? Now, it's still down minus 4 or 6 from Friday. Settle, I think it's 4, I'm trying to think. Anyway, Brainerd, so that happens. This is where we got long, I think, because it was minus 08 as well. And you got a lot, I didn't do much, but just a little bit. We took profit. Okay, some of it, so explain, some of our key shorts we've been talking about was GM and Ford. I didn't have GM, but someone here did. Ford, big A, because it's cheap to short. B, it's still marginal to 4 to 1 somehow when you're short. But the theories or the thesis they call it now, EV transition, the cost of all those materials, gasoline prices, and we just buried some market. So we took profit on that, and Ford actually kept going, if you remember, Darby.
Yeah.
Remember I took it? The other one I took profit on was Pinterest. That fell. I mean, look, we're obviously making good money on them overnight, but Pinterest went another $1 without blinking. And Snap was another one that, as you know, that's one of our favorite shorts, but here's a good example. Even though you really get bearish, because we're getting stopped on a few of those, like Bumble, neither of us or anyone in the group, actually, I don't think, got short Snap, and that's one of our favorite shorts. So if we're bears, we think that stock's a total dribbler that's in the DDD, and we missed it, right? So just think to yourself, how many people that are actually long got caught long? If people like that, us, were shorts waiting to hit it because we wanted another 50 cents. So that's worth considering. Them. It tells me a lot of people didn't get short out there. Mate, if you and I weren't short Snap, given what we think, and we watch it like a hawk, I think a lot of people would have missed a lot of stuff. And we were getting a little bit abused, a little bit. We don't take much crap out there because we always back it up with facts and things like YouTube and Twitter and that. But I noticed when I looked through others, some of the dribblers were straight out knocking other people and that. So, I mean, why would you do that? If you're, it's like when, okay, this is the best way I can explain it. When we were playing Little League Baseball, we 2 kids playing Little League, when a coach would go on, and I go, look, dude, if you're going to get this pissed off, have a 7 or 8 year old baseball, you got problems. And if you're going to gloat about it. The same thing applies. You've got to remember, most of these dribblers are hobbyists. If you're pro, you don't say it. The odd one does, because you're on there for information or to help people. If your ego needs to be sated by most people that are relevant, people that you don't know, that may be bloody bots, then you got a problem. And we'll leave it at that. So be careful of who you follow and who you listen to. And don't waste your bloody time. Right? Anything you want to add to that, mate? Or
Yeah, man. You know, I mean, some of these guys are just got bad attitudes.
Yeah. And that's a good song, I think. But actually, one thing I wanted to look at was the Bund. So the German, the benchmarks around the world are basically 10-year notes, right? Because 10 years considered, well, in Europe, I think that's the mortgage. I think we're one of the few that have 30. In Australia, might have 20, but I think most of the world has 10s. So it's like a business loans, usually 2, 5, or 10. So it's considered the benchmark. So as you know, the Germans had negative interest rates forever, and the ECB and a bunch of countries. So what's happened, this is the Bund, right? So that's the German 10-year bond. Look what it's done since March, right? It's done what we've done, 174, but it's collapsed from 170 to 144. Bear in mind, the ECB has not raised rates, right? They're talking about it next time, 0.25%. These are massive moves, Madavi. And so the other thing you need to know is the spread matters. So Germany's your blue chip. Now, obviously, they got issues with inflation. It's even worse with energy and all that sort of stuff. So they're the blue chip of Europe. So this, if I was to put this up with Italian bonds or Greek bonds, it's even worse. In other words, the spread between Greece and the pig, what they used to call the pigs, which is Portugal, Spain, Italy, Greece, and Ireland, is dramatically worse than this. It's growing, right? So basically you got French, which is the Bund. German, which is the Bund. The French is the National, and the Gilt, which is over in England. They're kind of your blue chip ones, right? With it, it's kind of like the thing here. But this is a dramatic move. And so at the same time, so interest rates here are trying to keep the spread. So remember I said watch your currency. So Euro had that bounce, and this is all on the weekly. You need to be familiar with it. It's all on the website. You need to familiarize with these, and so this is important about size. You'll still stop out occasionally, like we did on some of the equity. Notice what we stopped out of was equities, because the dribblers are in the equities more than anything, right? And they're going to be your worst traders, which may stop you out, right? Never be pig-headed. You never know. You saw a GameStop last year. But anyway, jump on here. It's on the website, Market Weekly. It's everything that's going on this week, right? So you got all your currencies. And actually there's one just dedicated to currencies, one just dedicated to oil and gas. But get on it and you'll see what's happening. And it'll explain it a little bit better. I just wanted to share that one. Okay, so energy. Here's what's interesting. So here's Natty first. This is weather. So natural gas was down here around 8.40. I think it got down as low as 8.36 on the futures. Lo and behold, I didn't see that. It bounced and closed here at 8.67. Look at the bounce on that. Still the same pattern. I don't think we need to spend too much on this. Unless those that are new. We're just building this flag. So when it's like this, chopping around 7/8 on the weekly, it's a good time to, if you've taken, and it's over plus 2/8 here, so you know it's overbought. You want to see it consolidate more for bigger moves. It's best to just stay out of it, unless you're a hedger and you got to have something. Look at oil. Didn't even flinch today. And it's closed up on the day with all that selling, which tells you this is more than risk asset stuff going on, right? And on the daily, look what the low was again. It was that bloody tanking. So keep an eye on your charts. If you haven't got Sierra, that's the best deal out there, but it's got all the stuff. Cheap as they come. And great product. That's that. Okay, I think we covered everything. Now it's going to look at some stocks. So we're going to... Which one has the stocks on it? Yeah, this one. Thought so. So I guess we'll look at the bonds here real quick. Look what the yield got up on the 10-year today, Madabi. 3.41, almost plus 3.8. So typically this is really overbought. But when you get this kind of panic in credit markets, you can see the same thing here, down to 138. So there was some, you saw on the spread it took profit. This is telling you how broken the market is out there. We looked at the German one, and now this is the American one, okay? Let's have a look at AERC. You may remember this from last week. Madavi was trading it. So we get to look at one punter stock. So what's interesting with this, even on the demolition that was going on today, look at this, Madavi. This thing ran. And yes. Fundamentally, you told us last week, it's something to do with air filters or something.
Yeah. It's actually a good stock.
So, yes, it's actually got fundamentals. And it's got a small float. So what happens, a lot of day traders that aren't futures traders or look at the bigger thing and just buy and hold, they follow each other where the volume is. Now, I didn't partake in this today, but I just wanted to share it with you to see how it goes on. And you can see how it was all thin in the morning, and then as the day went on, the once volume started picking up, the punters started to get into it. And you can see it had traded from 3.8 up to plus 3.8, so full move, and look what happened to plus 3.8, which was over $18. It fell all the way back to 13. It started the day at 11. I mean, I would suggest with these, gamble responsibly, right? And if you've got issues, give your local Gamblers Anonymous a call. Right, if it is a problem for you. And I don't say that lightly because this is dangerous stuff. But if you understand volume and you understand what they're doing and you use your Murray, it's very helpful. And look what it did. Remember, three waves, consolidated and then mowed it up again. So that's ERC. Okay, let's look at a couple of the dribblers. Our favorite, as I mentioned earlier, was Snap. But we were looking for more of this gap to fill, see on the daily chart, and it never got filled today. Oh, it never got filled for us, so we never got short it, but look what it did. A new 52-week low, Madavi, on Snap.
Yeah.
So we're kind of annoyed because it's kind of it's like one of your children, and you're not with it. It sounds wrong, doesn't it? But you know what I mean. Okay, let's go through some of our dribblers. So Path, as you know, and so remember, profit was taken on this when we took profit on all our big shorts about 3-4 weeks ago. Some of these we got back on, some we didn't. Some that follow the index religiously, you killed it because you're on all of them. So, but look at the technicals. We're going to look at it a daily. Let me find it. And so if you think we just do things for the fun of it, we don't. We have a plan, and that's the point we try to make. So we took profit down here almost at the bottom. I think the bottom was 12 or something. But anyway, which means we didn't go long. We're never going to go long a dribbler stock under principle unless we think it's a 5 complete, which we didn't think. So look what it did. It got all the way back to 22. Yes, we missed $10 bounce. But guess what? We were locking in all that profit. And this was the short. Actually, Johnny, I believe, did sell this Madavi Path. I remember him telling me to short it. But lo and behold, of course, we didn't. But look what it did today. Dribbled all the way back, broke Cajun. So that's $4 right there. Our other favourite dribbler, which is, we'll just go through a couple of them. We don't want to be here all night. So what's the dribbler we probably made the most on? It would be this one, wouldn't it? Palantir.
Yep.
So look at this. This is one of the biggest stocks. As you know, we talked about, we took this, I think we got filled under 6 pre-market, didn't we? This is a real good short, real easy. So what this did, this is what we thought Snap would do. It went back and filled the gap, right? And retested this low, so we were able to put it back on. Unfortunately, Snap never did. So this got all the way back to 940, 930. And you can bet there were dribblers out here who actually bought it up here rather than here because they're convinced. And look what it just accelerated the downside, $2 down. So you can see we want an ABC. This was technically a thing of beauty. So that's Palantir. I know one of your favourites, mate. In the DDD. Snap's probably our favourite, then Palantir. And then Path. Path's another one. So here's another one that's a favourite. That, again, this one somehow I just missed. I think because of that Bumble miss-up. But U is one. UPath, I think it's called. Unity Software. Sorry, UPath's the other one. So that filled the gap. And this is why we never did Snap. You can see there's a pattern here. All the other gaps were getting filled. So this bounced all the way back to $47. Today it's trading at $33. Okay? In our DDD. Now, Upstart's another one of our favorites. Did you do any Upstart? I know I didn't.
Not today.
So, if you've noticed what we've done this time is try to concentrate more on futures. And that was because there was too many dribblers moving stocks or trading rooms and stuff like that. So Upstart got nowhere near its gap. And we're always looking for regions to sell these things, but it didn't even get back to support. That was 71. It got up to $56. Today it finished at 33. I mean, this is why you're in them, right? Who else is in the index? Fubu. A lot of these are almost dead and they're going to be replaced. We just give the B wave a place. So this little beauty is down to 245, right? And all it's done is constantly sell off the Cajun, the pink line. What a dribbler that one is. That's a chronic dribble. So, I don't want to... Let's go through while I'm thinking. I want to go... I don't think Amazon's been fixed here yet, but we're going to look at it. Oh, yeah. So we're going to look at a 5-minute Amazon. The reason I'm bringing this up, I'm going to talk about it. A lot of people make the mistake and they fall in love in a bull market with bonus issues or splits, whatever you want to call them. The reality is, the reason they work in a bull market is people just think things can only go up. And they think they're getting more of a great thing cheaper, right? But in reality, it just means more shares. Nothing changes economically. So in a bull market, that's great, right? And I think we've talked about this a number of times, is that it means more people can trade options, which gives more volume. One too many. I knew that would happen. More volume. So in a bull market, that means more calls, right? In a bear market, what's it mean? It means more puts. So Amazon, if you remember, we did this trade not this Friday, but the one before. We went long the weekend for the split, and we flogged it, knowing that we've still got that bull market mentality, and we flogged it on Monday. And I think for $5 or $8. Remember what we made? It's something like that. Anyway, look what's happened, because all it is... You've just got more shares at a lower price, but more shares in the index. This thing we flogged at 128. We're just showing you here from 122 plus 2/8 on that recovery. It went all the way to minus 3/8. So it lost 28%. Right? Here's what's crazy. The calls were through the roof up here, which was what I think Madavi was saying. They all come in and buy option. And so you were able to get really good vol. So pros that kept it, right? People that kept it were able to sell calls and are covered for a lot of this move. But keep that in. The other stock that just did that, and this is why I was bringing it up, was Tesla on Friday went to the age-old, hey, we're going to do a 3-for-1 split, which they'd actually telegraphed before. Now, the same thing. So on Friday after the market, they announced it. So that's here, right? So here's where they announce it. It pops from 690. It goes up to 716. And I remember this trade specifically because remember I said, well, this doesn't change anything. This is a sell, right? Remember I had that? Because of everything I just said. Look, and so this also got upgraded by someone on Monday. Look how it fared. This is Friday. It's not going to stop it getting wrecked by the market. It's 650 is where that come off. So the important thing is just recognise the market. Now, while we're on Tesla, I wanted to talk about Mr. Elon Musk. So I have a theory on Mr. Musk. He's pretty shrewd on this Twitter trade. Firstly, whether he wanted to get it, I don't know. There's a bit of me thinks, I don't really believe Donald Trump wanted to be president. I thought it was a marketing exercise. He ended up with it. And Madavi made that point about Tesla, and it clicked with me a while back that Tesla uses Twitter for marketing, right? Cheap marketing. They follow him, and it's really given brand name Tesla a thing. Now, Elon's not a stupid bloke. And we've talked about before that one of the great trades was Mr. and Mrs. Bezos. I don't know if they really... We know they're still friends. They're divorced. I've seen this before. We saw it with Murdoch, with News Corporation. I've kind of different... And, we tend to think what we think, say what we think, or possibilities. When you get divorced, you have to sell the stock. You don't have to. You divide it, but it gives you a reason to sell it with the market not, he's bailing on the stock. He's bailing on the stock. So we saw that with Amazon. We just looked at great trades by the Bezos family, right? Same thing at News Corp. Plus it also changed control, right? So Anna Torv, who was then married to Rupert Murdoch, then controls the trust. I'm not going to bore you with it all, but anyway, point being, we come to Elon. Elon doesn't have that luxury, right? He's had more wives than freaking Henry VIII, I think. So that theory's out. Okay, he said, okay, I'm thinking of selling. Should I sell Tesla stock? This is pre-Twitter. Should I sell? I guess we should have a Tesla chart out, right? Oh, we do have a Tesla startup. So let's go to daily. Should I sell Tesla stock? He goes on Twitter. Of course, the poll answers yes. I wonder how many bots answered yes, Madavi. So he sells. He pays his tax, all that, and a little bit more. Then, when he does a Twitter thing, he goes, you know what? I got to own this, so I'm going to have to sell some stock. He does the same thing. So look where he sold up here, 1,100. 1,000, 900, 800. Look where we are today, 647. Now, just a thought. So, okay, the market's crap. I don't know. I don't really pay this for Twitter. Obviously, I'm overpaying. So we get the campaign. Well, firstly, the arrogance was, I ain't doing due diligence. But that was probably smart. Now he alleges fraud effectively. He doesn't use those words, but he's saying the numbers are BS, right? On the robot stuff, right? For the bots and all that. So now he's basically saying, if you don't prove to me that, then the deal's off, right? It's a breach of the deal. It can go to courts, whatever. At the same time, it's bringing down the value of like-minded things, YouTube and all those other things, right? So now he has a choice. He can walk away from it, pay $1 billion. He can walk away, get into litigation, settle, or maybe win, accuse them of fraud, maybe get some brownie points of SEC. There are conspiracy theories out there that Elon is a lot more powerful when he lets on. He's tied into this and that, whatever. These are just theories, and these are just things out there. So all these things could unravel. It's going to be interesting what people thought. So if you have different ideas on that, hit us up, Twitter or YouTube or something. I'm just spitballing. But what a heck of a trade, Madavi. If he actually sells all this, doesn't go through with the $30 billion at Twitter, which he's raised $30 billion to do this, right? either buys it later cheaper or just, you know what, I've taken profit on some of my Tesla. What's your thoughts on all that theory? Is this one of my half-baked theories? You there, mate? I think he's on the phone right now. So that's that. Share with it. On NVAX is another one that Madavi, as you know, that's one of his big shorts. It's continued down low to 36. So look at how brutal this market can be.
That could possibly be. I agree.
With my monk.
Musk.
Yeah. So he.
People to don't say anything. Sell stock. I like it.
Yeah. I mean, that's a hell of. He ain't a dumb guy, right? Whatever you think. No. And I know a lot of people hate him and all that, and they think this and, whatever. And I find it laughable that if you're up that much money, you don't have the right to take profit. So there's different ways to do it, and they got to be careful to do it, and you got to control your ego.
A guy like himself, it kind of shocks other investors, right? That he's getting out. So he's got to be careful how he gets out, because if he's selling, it means everybody thinking he thinks it's top.
Right, 100%. And so the Bezoses did theirs perfectly as well. So here, let's talk about NVAX. So NVAX was the one, they got approval and you covered the short, then you redid it. You took a little bit of a loss and you rebuilt it. Yeah. Look at that great trade, mate. That was glorious. That's
I still have 18 shares of it. Where's it at today?
36 got down to almost 34.
Oh, man, beautiful.
It's a gift from Gad.
That's a stock that's going to be down $1. That's $1 stock you're looking at, ladies and gentlemen.
At the dollar store, do you think you can pick it up there?
I guarantee it's going back to $1.
Oh, you can't guarantee. You know that. You can't guarantee. Allegedly, it's going to $1. Allegedly. So let's look at Apple while we're up here. So anyway, punters and dribblers, that was a bit of a dribble on Tesla there, but we'll see what happens. I want to see how that plays out. So Apple's a big one, and that was a glorious short. Now, talk about dropping the ball. I don't know how this happened. I got distracted. I remember telling, because Johnny likes to know what I'm doing at Apple. So it went right to the point here to resell. You can see it all here. Got back over 150. We were buying 135 puts for 31 cents. When was it here? And remember that I've somehow, I don't know how I distracted. They're like $5, $4.40 or something now. So sometimes starting a game plan, there was just too much going on with oil and gas and everything. I need an assistant basically at that point. But look, these are based on facts. We know Apple is the market. We know Microsoft's the market. And we know Exxon's the oil market. You got to stay true. You know there's liquidity there. That's why we go there. But that was so those ones, that's a great investment punt. For punters, 30 cents, 4.40. Investors, you're hedging your length. Maybe you're going short, right? So traders, just a great trade. That's Apple, the one that got away. The similar time, to give you an idea, we bought puts in the S&P, the Spider. They, at 31, they went to over 11. I think they might have gone over 12, but we exited 11.30 today. So that's your punter element of trading. But have a plan, and knowing you're risking something that 3 times out of 4 may not make money, right? Because you're doing them off these, you don't know how, and you're doing short-dated options. So that's just something a lot of desks do. A lot of it's to get around VAR, actually. Not that that's what we do, but it's for that. What other big stock? Is there any other one we want to look at? I think that's it, right? I think we've covered everything pretty well. If we haven't, punters, so remember, you got PP. Let's go through. We got PPI out tomorrow morning, which you know is going to be hot because you saw CPI for that. But what other big stock? Is there any other one? But you don't know how hot, right? So it'd be interesting how the market reacts. The market seems to be, as I said, stock market's way, way behind the 8 ball. It's already factored in bonds and currencies. That's what we talked about that. Then you got the FOMC starts tomorrow, ends on Wednesday. That's what it's going to be all about. What Jerome Powell says in that meeting. Now, there is, I think it was Standard Chartered came out and said there's a 10% chance of a full 1% hike. There's more people coming out with a 3/4. I think JP Morgan's one of them. There's quite a few. Most people are at 50 basis points, right, which is 0.5%. We will see how dramatically they want to go. Remember, Powell, there's so many people just blame Powell for everything. But Powell's made it very clear this is supply interest. He's been juggling with what he knows hot potatoes. He knows with the debt. He knows the political influence. So Trump made a big issue of the doubt, then Biden doubled down on that when he said, see, it's up at record highs with me. So he knows politically, he knows the asinine energy policy. He knows all the asinine policies going on, and then you have a war. So I don't know what you expect the bloke to do, basically. But what he does know, what we do know is the market is all attuned to money. The thing is, credit's already frozen up. Interest rates are over 6%, I saw now, on 30-year mortgages. The little man's getting wrecked, right? You saw, there's a report on the website there that gasoline went over $5 for the first time ever on national average on Saturday. So you got all these factors to take in and take them all in with your trading. And you got bonds, you got stocks, you got futures, all these different things, all play and watch them all. I guess before we go, we should look at the ultimate dribble, and that is RK. So that's, as you saw, gap down, like everything did, and we're back down. Not quite at that low, but we're back smacking that 423% off. Okay, well, good luck. Watch your exposure, understand your risk. If you're uncomfortable trading in this market, that's okay. And in fact, it's a wise trader recognizes that themselves, right? So there's a difference between trading and gambling and investing. So thank you for joining us. Thank you, Madavi. Hopefully people have started to understand the strategies. What we're doing, we're not the only ones. There's some good thing like this. Yeah. And that's what we want to share with you, right? Not with the hobbyists, the dribblers, the blokes trying to... grift, basically. What's the word? Groom. So, as you can see, I don't know how. This was one of the more obvious plays. We walked you through it. We realized when we got stopped on a few things, I realized, you know what? We're going to just go concentrate on futures on this. And we went, if you wonder why we didn't get filled on Snap, as we said, that was why. The gaps didn't get filled, we got Snap. And we went to boring old Ford to short. Why? Because it was so heavy, and we, you know what I mean, and you didn't have the dribblers or the certain hedge fund or something. Remember, if you want to short something, you push it up to short it, and that was clearly going on a lot of the DDDs that we just showed you. No one wants to own any of those stocks in this market right now on the pro desk, right? I'm talking traders. So hedge. What do you call those? Mutual funds and that, maybe buy them, or dribblers averaging down, stuff like that. But bear in mind, anything that you think may get bought out is your risk. So be careful what you short, okay? Remember we took a loss on, and the other thing was biotech. Remember we took a loss on that Veru because someone upgraded overnight and it was a biotech boom. So you got to be aware of live biotechs and stuff like that. Anyway, I think that anything else, mate, I think that's good. It was a good night. Go enjoy your sleep. Give your families a hug. Walk your dogs. Stay off the drink during the trading week if that's your problem. It's going to be a very noisy week. Okay, see you, mate. See you, everyone. Enjoy.